Welcome to the deep dive, where we cut through all the noise and get right to the heart of the matter. Today, we're diving into a topic that's been making a lot of headlines and causing a lot of anxiety. You know, the possibility of a recession here in the US. But before we get started, a quick shout out to our sponsor, Trading Blitz. It's a stock trading simulator that lets you test out different strategies using anonymized historical charts. No real money involved, so you can practice your skills and maybe even discover you have a hidden talent for market timing. You can check it out at tradingblitz.com. Now back to the main event. The Dow just took a huge nosedive, plunging nearly 900 points, its worst day of the year. The S&P 500 is also feeling the heat, marking its worst week in 6 months. Needless to say, a lot of investors are feeling a bit jittery. And of course, we need to address the elephant in the room. Is a recession actually on the horizon? We've got a stack of sources here, expert opinions, economic indicators, the whole shebang. We're going to break it all down for you so you can understand what's really going on and what it might mean for your own financial future.
But first, a very important disclaimer. This deep dive is purely for educational purposes and is not financial advice.
It's definitely a time of high anxiety and uncertainty. Just a few weeks ago, the market seemed relatively stable. But now everyone's asking the same question: are we headed for a downturn? And if so, how bad could it get?
Okay, so let's unpack this. Our sources point to a few key factors driving these recession fears. One of the biggest is President Trump's trade policy, especially the tariffs he slapped on countries like China. What's the rationale behind these tariffs, and are they actually achieving their intended goals?
Well, the Trump administration argues that these tariffs are a necessary tool to protect American jobs and to rebalance global trade. They see it as a way to push back against what they perceive as unfair trade practices by China and other countries. They also believe that tariffs can be used as leverage to get other countries to contribute more to global security and defense, particularly within the EU. The argument is that the U.S. has been shouldering an unfair share of the burden for too long.
So basically, it's a play by our rules or face the consequences kind of approach. But are these tariffs actually working, or are they backfiring and hurting the U.S. economy in the process?
That's the million-dollar question. Some economists argue that these tariffs are actually doing more harm than good. They point to the fact that tariffs are essentially a tax on imported goods, which drives up prices for consumers and businesses. This can lead to slower economic growth and potentially even job losses. They believe a better approach would be to focus on cutting government spending and reducing regulations to stimulate economic growth. They argue that this would create a more favorable environment for businesses to thrive and create jobs, without resorting to protectionist measures like tariffs.
It seems like a classic case of two sides to every coin. One side argues that tariffs are necessary to protect American interests, while the other side warns that they could ultimately backfire and hurt the very people they're intended to help. So where do things stand right now with these tariffs? Are they here to stay, or is there any sign of a potential rollback?
It's a bit of a mixed bag. The administration did recently postpone tariffs on certain goods from Canada and Mexico that fall under the USMCA trade agreement. But the tariffs on Chinese goods are still very much in effect, and those are the ones that are really causing concern in the markets. Adding to the uncertainty, there are reciprocal tariffs set to take effect soon, which will impact almost every country that currently has tariffs on American goods. This tit-for-tat escalation is really worrying economists who fear it could lead to a global trade war and ultimately push the world into a recession.
So it sounds like these trade tensions are a major contributor to the current recession fears. But are there other factors at play that we need to consider?
Absolutely. One of the biggest red flags is the widening U.S. trade deficit, particularly with China. Front-loading imports ahead of tariffs might be temporarily boosting foreign GDP, but it could ultimately hurt the U.S. economy. It's like a sugar rush followed by a crash. And if other countries retaliate with their own tariffs on U.S. goods, well, that could lead to job losses here at home.
It's definitely a complex web of interconnected factors. But let's get back to the stock market for a second. We saw those massive drops in the Dow and the S&P 500. Are those just knee-jerk reactions to the headlines, or are they a sign of something more serious brewing?
That's where things get really interesting. Christopher Mullen, a technical analyst from the technicaltraders.com, suggests we're actually seeing signs of panic selling. He points to a spike in the VIX, which, by the way, stands for the volatility index. It's basically a measure of market fear. He also cites a ratio of selling volume exceeding buying volume on the NYSE or the New York Stock Exchange, and anecdotal evidence of people just dumping their stocks out of fear.
So it's not just a few skittish investors. It seems like there's a genuine wave of panic sweeping through the market. Does Vermeulen think this is the beginning of a full-blown stock market crash, or does he see a light at the end of the tunnel?
Vermeulen does predict a potential market bottom and a bounce, but he's not sure if this will be a true reversal or just a temporary pause in a larger bear market. He thinks we need to watch the data closely in the coming weeks to get a clearer picture.
Okay, so we've got these concerning signs from the stock market, coupled with growing trade tensions and a widening trade deficit. It's enough to make anyone wonder if a recession is inevitable. What are the experts saying about the actual likelihood of recession in the U.S.?
Well, the opinions are definitely mixed. You have some economists like Mohammed El-Arian who are quite pessimistic. El-Arian has expressed serious concerns about a potential recession, citing policy uncertainties and the risk of stagflation, a nasty combination of rising inflation and slowing economic growth. To explain it, simply imagine your salary staying the same, but the cost of everything, groceries, gas, housing, keeps going up. That's the pain of stagflation.
Ouch, that doesn't sound fun at all. So we've got trade wars, a potential stock market crash brewing, and now the possibility of stagflation. Is there anything that could make this economic picture even more complicated?
Alarian is also concerned about the Federal Reserve's role in all of this. He suggests that the Fed might actually be making policy mistakes that are contributing to market volatility rather than stability. Their attempts to control inflation through interest rate hikes could be having unintended consequences.
So it's not just the trade wars and the shaky stock market. We also have to worry about the very institution tasked with keeping the economy stable, potentially making things worse. That's a lot to unpack. Are there any other experts echoing Ilarian's concerns?
Yes, Larry Summers, another prominent economist, also sees a significant risk of a recession, potentially as early as 2025. He points to various economic indicators like falling bond yields, which suggest that investors are getting nervous and shifting their money into safer assets. He's also worried about the rising U.S. government debt, which could become unsustainable if interest rates continue to rise.
It sounds like there are some legitimate reasons to be concerned. But before we all start digging out our survival bunkers, are there any voices of optimism out there? Anyone who thinks we might be able to avoid a recession altogether?
Well, there are some bright spots. Billionaire investor Ron Barron, for example, remains bullish on the long-term prospects of the U.S. economy. He's not letting the short-term volatility shake his faith in companies like Tesla and SpaceX, which he believes are poised for significant growth in the years to come. He even sees the current market downturn as a buying opportunity for long-term investors. His philosophy is to buy great companies at discounted prices and hold on to them for the long haul.
So basically, buy low, sell high, the age-old mantra of successful investing. But not everyone has the stomach for that kind of risk, especially when the headlines are screaming about an impending recession. Are there any experts offering advice for the average investor who's feeling a bit overwhelmed by all this uncertainty?
Absolutely. Tom Lee, chief investment officer at Fundstrat, acknowledges the current market turmoil but remains optimistic overall. He points out that retail investor sentiment is already extremely bearish, which ironically could create a contrarian buying opportunity.
Right. Wait, so you're saying that when everyone else is panicking and selling off their stocks, that might be the perfect time to buy? Isn't that a bit counterintuitive?
It might seem counterintuitive, but that's the essence of contrarian investing. When fear is at its peak, that's often when the best deals are to be found. Of course, it's important to do your research and understand the risks involved, but Lee believes that certain sectors like financials and digital assets could outperform the broader market in the coming months. He sees potential in these areas, even if the overall economy slows down.
So it's not all doom and gloom. There could be some strategic opportunities out there for those who are willing to think outside the box. But let's shift gears a bit and talk about a specific development in the UK market that's caught my eye, the sale of the Boots UK pharmacy chain by Walgreens Boots Alliance.
Ah, yes, the boot sale. It's an interesting example of how global economic forces can impact businesses and jobs on a local level. Walgreens has been struggling in the face of online competition and changing consumer habits, and this sale is seen as a way for them to streamline their operations and focus on their core markets.
Right. It's a tough time for brick and mortar retail in general. But what are the implications of this sale for the UK market specifically?
Well, on the one hand, there are concerns about potential job losses as the new private equity owners look for ways to cut costs and improve profitability.
That's understandable. Anytime a large company changes hands, there's always that fear of job cuts. But are there any potential upsides to this deal for the UK economy?
There is speculation that Boots could be listed on the London Stock Exchange or LSE after the sale. Having such a well-known and successful brand on its roster could be a major boost for the LSE, which has seen a significant decline in IPOs in recent years.
That would be a nice win for the LSE, especially in this uncertain economic climate. It's interesting how a single business transaction can have such a ripple effect, both positive and negative.
Absolutely. It shows how interconnected everything is, both within national economies and on a global scale.
All right, we've covered a lot of ground today. Global trade tensions, the possibility of a recession in the U.S., market volatility, expert opinions ranging from doom and gloom to cautious optimism, and even a little detour into the UK pharmacy market. It's a lot to take in, but I think it highlights a key point that we need to keep in mind. The global economy is a complex and dynamic system, and understanding the forces at play is crucial for making informed decisions, both personally and professionally.
I completely agree. It's like trying to solve a giant, ever-changing puzzle. But the more pieces we can fit together, the better equipped we'll be to navigate the challenges and opportunities that lie
And
ahead.
that brings us to a critical question for our listeners to ponder. If the current economic uncertainty persists and the U.S. does enter a recession, how will that impact the global markets and the geopolitical landscape?
That's a fascinating question, and one that doesn't have an easy answer. There are a lot of potential scenarios, and the ultimate outcome will depend on a multitude of factors,
Yeah.
including the severity of the recession, the policy responses of various governments, and the actions of businesses and consumers around the world.
It's like a choose-your-own-adventure story, but with much higher stakes. What are some of the potential pathways we could see unfolding?
Well, some experts believe that a recession could lead to increased protectionism and nationalism as countries turn inward and focus on their own domestic interests. We've already seen a rise in populist movements around the world in recent years, and a recession could exacerbate those trends, leading to more trade disputes, geopolitical tensions, and possibly even conflict.
That sounds like a pretty bleak scenario.
Yeah.
Is there any hope for a more cooperative and collaborative response to a global economic downturn?
There's always hope. Some argue that a shared economic crisis could actually force countries to cooperate more closely. The idea is that facing a common threat could lead to more collaborative solutions as nations realize they need to work together to overcome the challenges.
So a bit of a we're all in this together mentality.
Exactly. It's the idea that a global recession could spur a new era of international cooperation as countries recognize the need for collective action to stabilize the global economy and address shared problems like climate change and poverty.
That's a much more hopeful outlook. But it seems like a lot is riding on whether countries choose competition or collaboration in the face of a global economic downturn.
It's a pivotal moment, that's for sure. The decisions made by policymakers, businesses, and individuals in the coming months will have a profound impact on the economic and geopolitical landscape for years to come.
So much is at stake. And as you said earlier, it's not just about numbers and statistics. We're talking about people's livelihoods, their hopes and dreams for the future. It's about the kind of world we want to live in.
You're absolutely right to bring it back to the human element. Ultimately, economics is about people. It's about the well-being of individuals and communities all over the world.
Well said. So as we wrap up this deep dive, what are some key takeaways that our listeners should keep in mind as they navigate this uncertain economic terrain?
First and foremost, stay informed. Understand the factors driving the current economic uncertainty both domestically and globally. Pay attention to the news, but also seek out diverse perspectives and analysis from reputable sources.
Don't just rely on the headlines, dig a little deeper and try to understand the nuances of the situation.
Exactly. Second, don't panic. Making rash decisions based on fear or emotion is rarely a good idea, especially when it comes to your finances. Take a deep breath, assess your own financial situation, and make informed decisions based on your individual goals and risk tolerance.
And remember, this deep dive is for educational purposes only. It's not financial advice. Always consult with a qualified financial advisor before making any major investment decisions.
Absolutely. And finally, remember that even in times of uncertainty, there are always opportunities. Whether it's exploring new investment strategies, developing new skills, or simply focusing on building stronger relationships with the people you care about, there are always ways to navigate challenging times and emerge stronger on the other side.
Great advice. It's not about burying our heads in the sand and pretending everything is fine, but rather about approaching the situation with a clear head, a proactive mindset, and a willingness to adapt and evolve as needed. So before we sign off, I want to leave our listeners with one final thought to ponder. We've talked a lot about the potential downsides of a recession, but what if instead of viewing it as something to be feared, we saw it as an opportunity for a reset, a chance to reevaluate our economic priorities and build a more sustainable and equitable system?
That's a powerful perspective. It's about reframing the narrative from doom and gloom to one of hope and possibility. A recession, while undoubtedly painful in the short term, could be the catalyst for positive change in the long run.
It's about challenging the status quo thinking outside the box and creating a future that works better for everyone. And who knows, maybe that's the silver lining we need to create a more just and sustainable world.
It's certainly a possibility worth exploring.
Absolutely. So let us know what you think about this potential scenario. We always appreciate your feedback and insights. This has been The Deep Dive. Thanks for listening.